And this is following Iran's bombardment of Israel. And the move has raised concerns about a potential regional war nearly a year after the outbreak of conflict between Israel and Hamas in Gaza. Let's find out how the markets are reacting to all of these geopolitical tensions. We have Chief Economist at Citadel Global, Maarten Ackerman. Maarten, good afternoon to you, and thank you so much for joining us. Just looking at the immediate reaction of global markets to Iran's missile launch on Israel, of course, taking a wait-and-see or tentative approach.
Yes, you're right. The reaction so far is probably less than expected. A bit muted at this point in time. Wait and see to see what might happen going forward. I think also after a year, the markets got used to, the kind of conflicts that we are seeing. And for the market to start reacting quite negatively, there should be certainty that these conflicts are actually getting broader and include more countries. So where we stand right now, the market is telling us that it is pretty much in a wait-and-see kind of mode. Not big moves, really. A little bit of up on the oil. If you look at the Chinese markets, they're up more than 8% today, so they're ignoring the Middle East totally. And they're only reacting on the announcement of the Chinese stimulus about a week ago. So for now, markets are not really that concerned. And I guess it's because we've been looking at this for more than a year already.
Yeah, but is there now an allure to safer assets, if you like, such as gold and the dollar, based on this heightened Middle Eastern geopolitical situation?
Yeah, I think, if we just unpack markets quickly for the last year, equity markets have been flying. So they basically don't act negatively on these kind of developments, whether it's Middle East or Ukraine, Russia, for very specific reasons. It's more the tech companies that's done extremely well. So you could probably argue a little bit immune against that global conflict where we are seeing it in the world right now. But 100%, the safe haven assets typically protect portfolios well in these kind of environments. Probably one of the best is gold. We know that gold printed double digits, kept up with equity markets as a hedge against the increase in global uncertainty. Global uncertainty where we are standing right now as a result of geopolitics are very much in line with the levels we've seen before the start of the First and the Second World War. So one needs to keep that in mind. So having those kind of asset classes in the portfolio, or in any portfolio, protect investors during these very turbulent times. Having said that, gold today is actually down a little bit. So that also talks to the fact that the market is pretty much waiting to see what is going to happen going forward.
Yeah, but is this an escalation, as some are suggesting, that there could even be a World War III? I don't know if that is an over-exaggeration, but or is this a backlash based on the Iranian strike on Israel?
I think that is where the market is looking for more certainty after the UN meeting later today. You see where this can go. I think after a year, the indication is still that it's very much regional based, pretty much the same as Russia, Ukraine. The Middle East obviously got more connections throughout the world. So if you just think about the last year with the conflict in the Middle East, we very often see kind of riots, whether that's Washington, even in Cape Town, London. So this is a conflict that can definitely pop up elsewhere in the world. And if that happens and more countries get involved, not only in the Middle East, there is a risk that this can escalate and as a result of that have a bigger implication on markets than what we've seen over the last year.
Yeah, and I see Brent crude per barrel has just broken over the $75 a mark. Of course, the concerns would be what is the spin-off or the knock-on effect, particularly when it comes to oil prices and petroleum in particular?
Yeah, I think OPEC made it quite clear that there's no intent from them to cut back supply. So yes, the oil is a reflection of uncertainty in the Middle East. But for now, it looks like, the supply is not going to be under strain. So if you think about South Africa specifically, for us, that is important because we import all our oil. The rand's been helping us as well. So we had a lower oil price, a stronger rand. And that's why we've seen a couple of petrol price cuts. Today, the rand reacted typically as it does as an indication of risk in the global market. So the rand weakened a little bit. But at these levels, we can expect to further see some petrol price cuts throughout this year. I don't think we're at a point yet where that kind of tailwind for the South African consumer turned around. So let's hope that things can stabilize, and then the consumer locally can also benefit from that going forward.
All right, thank you so much for your time and for joining us here on eNCA. Chief Economist at Citadel Global, Maarten Ackerman, just reacting to the Iranian-Israel strike and what this means for global markets. It's back to you, Gareth.